Okay, good morning, good afternoon, and welcome to the Tradinformed webinar. This afternoon, I am looking at, I've got three things to tell you today. First of all, I want to look at the process from going from a trading idea, just a concept, all the way up to an execution and what you can do with that idea if it is successful. So everything today is going to be demonstrated using Microsoft Excel. So it's very accessible. You can see on the screen here the Excel model that I'm going to use to demonstrate the process today. So we've got three processes that I'm going to show you: the idea, firstly; secondly, what we can do with that idea, how we can turn it into a trading strategy, how we can test different trading strategies, and finally what we can do with it. So I'm going to get started. This is a video, this is a model that I introduced recently. It is my weekly analysis model. So it is very simple, and for a reason that we really want to focus in on one idea. So that can be anything, and we can test multiple ideas, but at one time testing one thing shows whether that one thing is making a difference. So what this model does is it tests buying in a particular week, so the week of the year. So if I change this, you can see it update in real time. This is the effect of buying at the start of the year. So it shows you here, it's January the 2nd. If I put this into week 26, this is a typical day. Obviously the date will change for the week every year, but it gives you an idea of when it occurs during the year. So this is June the 19th. And if I change it again to 36, August the 28th. So you can see all it is doing, all I'm doing, the only variable is changing the week. So the only close that I'm using here is after a certain number of bars. So this is a time close. So I'm closing it after 30 days. So if I click over here, you can see this is the optimizer. Now you can do this manually. What I'm using here is a Tradinformed backtest model, and it automates and simplifies a lot of the things that do take a bit longer, but you can easily do this yourself in Excel. So you can see here, week number 1, week number 2 is very simple. And what we get, if I just go across here, is a visualization of the year. So if we were to buy in any one of these weeks, hold for 30 days, then close, look at the profit over time. Over the last 2 decades, I'm using the SPY over since the year 2000, and we can see there is a fairly distinct pattern. We have some strength at the start of the year, and then we have a dip. This is during the first quarter. End of the first quarter, we have the first significant rise of the year. That tails off again at the start of the second quarter. And then we have a period of middling returns. And if I scroll all the way over here, we get to where we are now. As I record this webinar, we're at the end of September 2021, and we're over here. So we're at the end of, we're week 39, week 40, maybe even week 40. And you can see we're just starting to get into the green period. And that green period gets darker and darker up to about week 44. And I'm going to show you later in this video another way of visualizing this data. So first of all, it's really very, very simple. We've changed the week number, and we've just looked at how changing the week number can affect the your trading results. But we're not even looking at the trading results. We're just looking at how the week number changes throughout the year. So I've got some data. So I'm going to hone in. Let's go back quickly to the optimizer. I'm going to hone in on these weeks here. Weeks 40, 41 to 48. And I'm going to do that in another model. Now this is step 2. So we've had an idea. We've had an idea that throughout the year, trading conditions change, and it might be good or better, should we say, to buy at some years in a typical year than it is to buy at other times of the year. So, and we found out that yes, it is. So what are we going to do with that information? Well, what we can do is put it into another model. Now this, we're starting to refine it down a little bit. Now this is the same model that I featured in my recent video. And so I've got a few things designed in here to make it look closer to what we're experiencing at the moment. So what we're experiencing at the moment, if you look at the SPY, we're up around about 20% on the year, maybe a bit lower. We're very close to all-time highs. And those are the key conditions, or two of the key conditions. So, so I've identified how we can look at those conditions. So firstly, we can refine the model. So all I'm doing is looking at weeks 41 to 48. So I've taken the model, taken the information from the first model and put it into this one. So within this time period, how can we make it work? How can we turn it into a trading strategy? So I've got a few built-in things here. First of all, enter on a lower close. And I can toggle this on and off, and it makes very, very little difference. I can try adding a profit target. Many of us trade with profit targets. I certainly do quite often. I can change the stop loss. Now there's other things that we can change in here, other built-in things. We can change how we do the position sizing, but I'm not going to get bogged down in that at the moment. All I'm looking at is focusing on this and focusing on what we can do. So you may have another idea. You may say, well, I want to test a particular indicator. Maybe you have a favorite indicator, maybe the Stochastic Oscillator, the RSI, MACD, whatever it is. So how can we test that? Well, first of all, I've got another spreadsheet here. This is my 21 technical indicators spreadsheet. You can get the formulas all over the place, but this puts them in at one handy place. So Stochastic Oscillator, which I like, RSI, which I like as well. So why don't we have a look at let's have a look at the stochastic. So I haven't done this previously. We're using Excel. So we can take the formulas from one place and put them into another very easily. So all you would need to do, if you're using this process, Tradinformed backtest model, is go into the backtest area here. Now you can easily insert more columns, and I need to insert the columns here from G to K. So go back to my model. Let's make some space, highlight them, insert them. Let's get the color back to how it was. Find the formulas again and copy a selection of them. So starting in G3, copying a selection. G3, copy and paste. Now we always use copy and paste when we're moving formulas which we want to re-reference new data. So highlight the bottom row of cells, copy them down, and if you like, neaten it up a bit as well. So we have the stochastic oscillator in our trading model now. So how can we use it? Well, we can use it in lots of ways, but we can add it to our entry and exit conditions. Now, if I drag this down, it may seem pretty complicated, but really it doesn't matter at all. This is just how I've set up the model. If you want to include the stochastic oscillator in your test, all you need to do is add the conditions at the start. So what do we do with the stochastic? Let's say a crossover. Very, very easy. So %K crossing over %D. So this is %K. %K in the current period, must be greater than %D, and vice versa in the previous period, because we want a crossover. So it's coming in up here. That's what I've just done here. Previous period must be lower. This makes it a crossover. Press enter. Copy the formulas down. Go back to our results. So this is what the stochastic oscillator looks like. So we can change the stochastic oscillator as well, can't we? So let's go all the way up here. So we can change the no, we'll leave those the same. So we've got the basic stochastic oscillator. And we can see really that it's not particularly helped us at all. So we've eliminated something. Has it helped us? We actually want to do the reverse. It doesn't look extremely bad, but it could be worth even trying the reverse. So instead of a crossover, maybe let's have a look at a cross below. All I'm doing is reversing the symbols. So lower and higher and greater than. So interestingly, we found that with the stochastic oscillator, surprisingly a close below, but maybe that fits in with what I know for having tested many strategies on the S&P 500, SPY, is that quite often a buy the dip approach, even in the strong period, this strong time of year, a buy the dip approach can get better value. And that seems to be what is happening here. So it was very easy to test the stochastic oscillator. It's taken me about 2 minutes to put it in there and explain at the same time. If you happen to like the RSI, Bollinger Bands, Super Trend, Donchian channels, whichever indicator you like, you can put them into Excel and you can see the results update in real time. And the advantage of using Excel, if you're familiar with using Excel, is you've got everything here. You can see things open and close. It's not going on in some mysterious black box. Trade opened here, trade closed here. Okay, so I've demonstrated there from initial idea, maybe things change throughout the year, to how can we exploit that information. And I've not used the stochastic oscillator before on this particular strategy, but you can see we've got some interesting results. Maybe not a trading strategy, but something interesting. Maybe we can refine it a bit further. So I said there was a third thing that we can do. And this is something that's only really occurred to me in the last week or so, is how else can we visualize this data? So we may find that throughout the year, the markets tend to get stronger or weaker for maybe a myriad of factors. Who knows why they tend to get stronger and weaker? But how can we take that information and use it? So what I've done is I have created I'm just going to bring it over here, a visualization of something pretty similar to what I was just demonstrating. Now, instead of trading weeks, what I've got here is trading days. So we've got them slightly more granular. So every single trading day. So typically we will have 200, maybe 240, 250 trading days a year. What this shows is how throughout those typical trading days of the year, what happens to the price. That's shown in blue. And red is showing what is happening in the current year. Now, the next thing that I need to clarify and explain is that these have both been detrended, because particularly if we're looking at the SPY, most equities over time, they tend to rise, again through a myriad of different factors. So they have tended to rise. And if I go over here, see, I've created this one to have a look at the original data. So this blue line here, slightly darker blue, is actually the same as this slightly lighter blue. You can see, maybe we're just comparing it here, we go down and go above. So here we're going down and then we're going above. And the reason they look different is that this linear regression line, which is the best fit straight line through the data, has been turned. So this linear regression line has become the 0 axis here. So I have done, basically what I have done is detrended it. So I've taken out the typical trend and we can have a look within that trend what the patterns are like. So even though prices have tended upwards this year, we're still looking, as of today, as of 24th September, we're slightly lower. We're below here. We've had a little bit of a sell-off. And today, I think we had a slightly lower open as well. So you can see we're actually going this year pretty close to the typical price. So that's not obviously not going to be the case in all years. However, we have had this period of strength here. We've had a period of relative chop. This was actually a grind up this year because we've had strong gains. And then we've had a dip just recently. What I said about this was this is a tool that we can use. Now this tool here I've made available to Tradinformed members. If you want more information about that, you can go to tradinformed.com. There will be links below the recorded version of this webinar as well, and the live version I believe as well. What we can do with this, well, lots of things. Well, we can take this information, we can superimpose it on our backtests, and we can see how it affects it, whether or not we should be trading larger position sizes when we're below this line and higher position sizes when we're above it, quite possibly, depending on our timescales and strategy. Also for our live trading, if you're day trading, it'd be a good idea to have this information at your fingertips to see, okay, we're in a slightly weaker position here. Typically we expect to rise, but we could also get at least another few more weeks of chop based on the typical price. So we've got a tool that is actually, you can use right now. You can use for analysis purposes, you can use for your trading, directly for your trading, to have a look, see where we are compared to the typical price. Okay, so hopefully I've gone through those three tools fairly quickly. I see, hello there, Mohammed, I believe it is. You've said hi. Anybody else there in chat, if you have any comments about anything that I have said today or any questions, feel free to question about anything that I've shown today. Please put them in the chat there. In the meantime, I'm just going to bring this back here. Let's have a look at the results. Let's go to this model. Got 3 spreadsheets open. Okay, so another thing you can do in Excel very easily. Tradinformed backtest model. It is a bit easier. We've got a few different ways of getting the data into the model. So Qqq and SPY tend to be fairly well correlated. So using the drop down menu there, I can have a look at exactly the same thing except on the Qqq ETF, Qqq ETF, which tracks the NASDAQ 100. It's going to take a few moments to update because I've got 3 spreadsheets open, always a bit slower. There you can see current market, the Qqq. Well, we've got results that are broadly similar. We expect a bit more from the Qqq, so possibly some of these settings, I've not tested it on the Qqq, possibly some of these settings are working against it, but we can easily find out. Maybe some different weeks will be better for the Qqq, but it tends to perform pretty similarly to the SPY. Anything else here? If you're interested in Forex, easy to put that in as well. If you're interested in stocks, let's just have a look at Apple. Apple, obviously a special case. I always say this when I'm talking about Apple. Very special case over the time period we're looking at here. When you look at the underlying market that's gone from adjusted data 3.7 up to close to 160, it's a very special case. So, not tended to work as well for Apple. Again, a negative result is sometimes very useful as well. Negative result. Well, why are we getting that negative result? It starts as thinking about it. So it's very easy to look at different markets, different types of market. We could look at some of the leveraged ETFs as well. Very easy to do that. We can look at the individual trades as well. We can break it down, see what's going on here. We've got some big losing trades, which might be what is going on here. The results themselves don't matter. What it tells us is what the key thing is. Maybe for Apple, this is not an ideal strategy. Just buy and hold would have been a great strategy for Apple. So I can't see any comments at the moment. So thank you for attending this webinar. I am really pleased that you have seen what is available, what you can do in Excel very, very quickly. It's not taken me long to do this at all, to go from concept, trading strategy, to creating a practical tool that you can use every day in your trading. So I hope you found this useful. Please feel free to contact me at tradinformed.com. There will be links below this video if you're watching it on catch up, and I look forward to speaking with you again soon.